Okay, there's a slight change in the law in this part. And I usually don't do this because all the while in the past, I see that examiner don't test. And then, but recently, this has changed. So I think it's better that we cover a bit, alright? Okay, what is this thing on asset held for sale? Now, you know, in accounting standard, you have this thing called classifying your asset held for sale, right? So you want to sell the asset, so you start reclassify your asset into a new category called held for sale. Okay, the law says like this. When you classify an asset held for sale, right, then we deem that this asset cease to be used. Okay, so once you classify that the asset is held for sale, the effect is it will then cease to be used. Now, cease to be used means it's actually disposal, because the law, the meaning of dispose includes cease to be used. Alright? And once the asset is ceased to be used, again you cannot claim CA because you're not using the asset. Alright? Now anyway, that's a problem. The problem is when you have classified your asset as held for sale, you still need time to sell off the asset. So the question now is, when did you sell the asset? Is it in the year itself when you classify, you sell it? Or you only sell it in the subsequent year? So they have a different way of determining what is the RE. Now, so that's why there is this provision here. Now, first they say, if these assets are sold in the basis period that the asset classified, held for sale. Now, this is the easiest one, the most straightforward one. Now, when your asset is sold in the basis period that you classify, right, how do you determine the disposal value? Now, the disposal value has to be the market value. Now, can we stress on the word classify? Not dispose, classify. Okay? With the net proceeds, whichever greater. Now, just come back here, next page. Let's look at this. You see, if let's say my year end is December, right? Now this is the point where I just write the word classify, okay? You classify your asset. That means you say you want to sell it. You classify on the day. Now like I just put a date. Let's say for example, you classify on the 1st of July 2015. Now, we have a few possibilities. One possibility is here. You sold it in the same year. Now, another possibility is here. You sold it in the following year. The third possibility is even until the end of the next year is not sold. So you say you want to sell, but you classify it, then drag until end of the second year is not sold. Now if it's not sold, the law will deem dispose. They assume that you sold. Okay, so we apply a rule called deem dispose. So either you are number 1 or number 2 or you are number 3. Now, and then there's another issue is, you see, when, let's say, you didn't sell the asset, right? Up to point 3, you change your mind and then you say, I want to use back the asset. So you take back and use it. Okay? So here, if you didn't sell the asset, and then you use back. Now, of course, if you use back the asset, then you got to go back to the problem of claiming CA, right? Then you got to start claiming CA. Now, when you want to claim CA, then you got to ask yourself, what's the qualifying plant expenditure? Because I didn't buy this asset. This is my asset that I had from the beginning, but I have disposed it. So how? So what will my QPE be? Okay? Now, we look at the first case. I have an example in the following page. Okay? Now, this is case 1. Alright? Right. Tyco year end is December. And on the 1st of August 2017, they have classified its office equipment. I forgot to add the word held for sale. Okay, this is that held for sale. Okay? Yeah, after I add the acquired there at the back, I forgot to say classify as held for sale. So just add it in. Okay, so on 1st August 2017, it has classified its office equipment as held for sale. Now, this office equipment, the company acquired it in February 14 for 100,000. Okay, we're gonna see case 1 first. Now, the market value of the office equipment on 1st August 2017. That's the date you classify, okay? 65. The office equipment sold for 70,000 on the 10th of November 17. Now, the year is very critical for us because the year you classify is 17. That's the year you classify. Your year end is December, right? So you classify in 17 and you dispose in 17. Same year. Same year usually is the most straightforward one, okay? Now, and then they tell you that when you dispose it, the market value is 61. The market value at the end of the year is 55. Now, that's really not important, okay? Okay, so how do you deal with this? Right, case 1. Now, my disposal value is the higher of the market value on 1st August 17. You must take the right figure only. Okay? 1st August 17 or the proceeds. So on the 1st August 17, the market value given as 65 and proceeds 70. So we take 70. Okay, as far as RE is concerned, nothing special. How do you get RE? Now, you're going to use the qualifying plant expenditure, which is 100,000. You know, you're going to start claiming allowance in 2014. Now, I'm going to have IA, 20%. AA, office equipment is at 10%, that's the rate, so 30,000. Now, the disposal take place in 2017, okay? So you're gonna get twice the AA. So that's where the 20,000 comes in. Now, so RE will be 50K, right? Now that's a balancing charge in year of assessment 17, 20,000. Okay? Well, I need to bring your attention back to the notes. So you go back to page 97. Now let's look at the law section 61 capital A sub 3. Okay? Now what does the law say here in sub 3? Now, sub 3 it basically says, can we just concentrate with the small a and b? Now, it says that in sub 3 that if let's say the asset is sold in the following period, that means you classify in 2017 but you sell in 2018, the next year, okay? Or, see, or it is not sold at the end of the following period. That means you classify in 2017, 2018, end of the year, so the asset is not sold. So this is why just now I highlighted to you case 2, case 3. Either you sell it in the following year or it is not sold at the end of the following year. Now, what does the law tell us about how to deal with this? Okay, first the law says, if your asset is sold in the following period, this is case 2. Okay, this is what we say case 2. According to my example, this is case 2. Alright. Now they say that in case 2, right, what you do is they say the amount will be the market value at the end of the basis period the asset is held for sale. That means the market value in the end of the year that you classify. Because held for sale is the year you classify, or the net proceeds, whichever greater. Okay, but case 3 it says, if this asset is not sold in the following period, then you just use the market value at the end of the following period. Okay, so if we come back to this. So for the case of 2, you must take market value on December 15. This market value. Or the net proceeds, and see which one higher. That's your DV. That's what it means. So you must refer back to the market value, the end of the first year, and the proceed. Now, whereas for case 3, right, you didn't even sell the asset, you're never going to have proceeds. Make sense or not? You don't sell the asset, there's no proceeds. So please understand that you cannot have proceeds. It's not sold. No proceeds. That's why the law says just use the market value on December 16. The market value at the end of the second year. There's no proceeds, because it's a deeming provision. Okay, that's how you determine DV. Now what about RE? Now this is a paragraph that tells you how do you get the RE. when you have an asset that you dispose in the second year. Now that's where the law has made a slight change. Now the law says that when you determine the RE of the assets for that following basis period, the total qualifying expenditure incurred reduced by the IA made. That means if you claim, then you minus. Made means you must have claimed. What if I never claim IA because when I buy the asset at the time, maybe I didn't use the asset, then that's it. Don't minus the IA because they say IA made to you. Now, minus any AA made to you. So any IAAA for any year of assessment made to you, you minus it. Now, and then they add on the third one and says, an amount of annual allowance which would have been made. Okay? Which would have been made. That means it's notional. Notional. In which asset was classified as held for sale. So I'm going to show you how the amount affects us. Now let's go back to the example here. Case 2, right? We just do a slight modification. We say you sell off the asset for 45,000 on 12 March 18. See that? Second year. Okay? Now the market value is 50,000. And the market value 31st December 17 is 55. Okay, so how do you work out the BABC for this case? So now you see, for case 2, right? The disposal take place in 2018. Now the disposal value is higher of the market value on December 17. Now take note of the date. December 17. Or the proceeds. Now December 17 is 55 and you're selling it for 45,000. Now we're gonna take 55. Okay? Okay. Now you can go back with the RE that you have on top, but I want to do this so that you can see clearly. Well, I don't think you like that. I'm going to copy and paste. Now, this is the same RE just now. Okay? Same. We start off with 100. Okay? You claim this in 2014 and 2015 and 2016. Now I'm going to push up. I'm going to push up. Alright? Okay. Now take note of this. The year you're disposing right now is 18. That's the year you're selling. So what do you do now with 17? See, in the past the law never actually say what to do. It was not there. It was not clear. Alright? But now they made it very clear. They say, okay, you have to put a notional allowance in the year you classify. A notional allowance 10,000. That's all only. Just add a notional allowance, and now this treatment is more logical now than those days. Alright, so 100 minus this, you get that as 40,000. That's your RE. Now you get a balancing charge of 15K. Alright? Okay. Now, can I just show you this part of the notes and let's just finish off with case 3. Now, if you come to page 98, right, and see paragraph 6. Now, paragraph 6 says, what if the asset is deemed ceased because you've classified and you didn't sell it at the end of the second year, and suddenly you bring back the asset and use it, brought into use. That's what it says. You have classified and then at the end of the second year you didn't use it. Alright? You didn't sell it, sorry, and then you bring it back and use it. Now, so the law says that in that case, you deem to incur QPE based on the market value brought into use. And they say no initial allowance is given to you. Now, so let's just finish off this part of the law with the third case. Now, if you see the third case, it says, now this office equipment has not been sold at the end of the second year. So when you classify and you don't sell the asset, what the law say? Deem dispose. Okay, once you classify, you don't sell, then the law say deem dispose. Now they gave us the market value end of 2017 and the market value end of 2018. In fact, they go on and say, subsequently, the office equipment is put back to use on 15 January 2019. Now, first deal with 2018. You have a deemed disposal value that will be based on the market value on 31st December 18, the second year. Now how much is that? 48. Now what is the RE? Okay, you've got the RE from case 2. It's the same figure. You don't mind, can I just refer to case 2? Now the RE 40,000. So there will be a balancing charge in Y18, 8. Now but that's not the end, because when you use back the asset, right, the QPE is deemed. You didn't buy because it's still your asset, so the law says deemed to be 42. Why 42? You must take back the market value when you use back. So it's 42. Now and then the year is 2019, right? Okay, the law says you will not get IA. Because actually you didn't buy an asset, it's just a continuation, but just on paper we need some adjustment to the figure. So that's why the law says you will not get IA, but your AA will continue from the 42 at the rate of 10%. So 4,002. Okay. Now this is how we deal with asset classified held for sale. Okay. Now I some sort like finish off all